Hello, everybody. Welcome back to Pump City. It's been a while, isn't it, since we've had such dramatic and, should we say, sustained upside for everything. Everything bounced part one, everything bounced part two for traditional markets, but not for crypto. Although we did sort of say this, I believe, didn't we? Who told you? It was me. I told you 6 days ago, which would be 7 days ago, which was a week ago, about how 19,200 can be hit by next week. Now we're not quite there yet. Let's face it. I'm what is this? I'm $83 off that target. Oh my god, you failed, man. Well, it's a moving average game. That's what I'm talking about, to be honest with you, and a trend line game. So what we've seen so far is this descending trend line. This you can call it a descending triangle formation. The second one that we found ourselves in after the breaking out from this first one, getting tagged. This is, I'll call it the FTX triangle, because that's what it was. We had already broken out and we would have continued up with traditional markets if it wasn't for FTX. But thanks to FTX, we came down, made a new low, and then sort of meandered up. So we've already gone straight through this box of significance, which is great. We went in there the other day. I mean, the other week we went, and then this week and straight through, and we've reached more or less the target, the expected target. A little higher would be 19,200, and that's your 21 exponential. Now, this is a weekly chart, so the reason I'm talking about this is because weeklies, to me, are going to dictate whether or not we do go into a bull market or not. This could just be the very start of a bull market. This could just be a one last bear market rally. We don't really know exactly yet. But on the weekly, higher term timeframes, things do look good. We've got our bullish divergence on all the momentum oscillators, and we've been snaking up in an accumulative fashion, really, when it comes to the MACD. So that's just your weekly. So I'm not going to really talk too much about Bitcoin, really. But one thing I would say is that if we did break out of this ascending triangle, which it obviously is going to happen at one point, but if we were to do it now, it would be appropriate, given the fact that last night we sealed in a pump signal on the Ichimoku cloud. So that, if you all know itchy clouds, is a powerful signal, and that would be enough to take us to the next major level of resistance. I would argue that the next major level of resistance here is your 200 exponential on your daily, around 21,182 as of today. So if that was to happen, let's just say from right this very moment in time, that would be a further 12.5% gain on the back of this signal. Let's have a look over here. Is there anything to say that it's not going to happen? Well, that is a very high money flow index read, 94. So it doesn't mean that it can't go higher. Of course it can go higher. There is no divergence. But normally, we'll just back test this. Normally when you see a money flow index read of, into the 90s, but to 95 and beyond, it calls a very significant peak that it needs resetting from. So what's this one over here? October the 7th, 2021. Oh God. It wasn't the worst, was it? Let's face it. There was a nice big peak over here. What was that? That was March 22, found a nice big peak there. Found a peak over here. So again, this isn't able to spot tops. And again, this was overheated at this level over here, and we still made two higher highs. Again, this was mania phase. So TA, for the most part, renders itself not useless, but kind of less relevant when everybody is asking their grandmother for a loan and they're chucking money into Bitcoin. Oh, I'm gonna remortgage my kidneys. That it's got to be done. But the money flow index didn't give a significant peak. But for the most part, the money flow index, when it finds a high like that, it does find a peak. Now I think that there is an element of mania going on at the moment. You've got Bob Lucas talking about the 4-year cycle. You've got all these old Twitter accounts that we used to know and love in the bull market waking up, talking about bull this, bull that. Everyone's bullish again. Everyone's bullish again. And you know what? That's fine, because I was talking about this a little while ago. However, what I have to say is, with the money flow index peaking like that, and it being a Friday, and everybody and traditional markets and their grandmothers buying everything at the moment, I think it is reasonable to expect a pullback, not just because of a Bitcoin's posture on the chart here, with its 21 exponential on the weekly, with its descending trend line on the daily. I know it's got a pump signal, but these pump signals can take a little while to play out. It won't be cancelled out. It might not work, it might fail, but it won't get cancelled out like a trend signal on the Itchy Cloud. Let's just give it a bit of time, to be honest with you. I'm not saying we're going to go straight up. I think, if anything, we reset. I think we reset maybe to the to the tune of another $1,000 down. Let's have a look at traditional markets, so I can bore you to death with that, but it is all relevant. Obviously, I've been thinking about the euro pulling back for a little while now, making a new high and pulling back. It's not done it quite yet. It's very strong, and again, we've said that this is a bullish chart. And what we'll be looking for would be a pullback into these areas to see if the bullishness remains, because that's what this chart is. This is a good looking chart. We want this to continue. It's not overheated. We do have bearish divergence, but it's not overheated at all. This is a daily above all major moving averages, with moving averages in the correct place, with golden crosses on exponentials and on simple moving averages. I'm just looking for a pullback into that to see if we can, see if we can retest the golden cross as we normally do. It's very common to see that. Let's have a look at the Dixie. Right, so let me just. I need to really scrap a lot of this. Really, is not that relevant, but this trend line kind of is relevant. If we can take it just off the log scale for a brief moment, what I'm looking for on the Dixie is something along these lines. To see this get tagged. So we're talking anywhere from 100, which is obviously a very dramatic drop, to probably front running that by about 101.25, which historically goes back to this area here and this kind of top around here. I'm looking for a bounce on the Dixie. Now, I've been looking for this for a little while too, and again, death crossing coming on the daily. So we've got golden crosses on the euro to dollar, we've got death crosses on the Dixie, generally speaking. Golden crosses like to be retested for strength, which means a move down and up. Death crosses like to get retested for weakness, which means a move up and then down. So that's what I'm looking for. I still remain the same. I still believe that this is going to be the case. Just because I'm saying the same thing every day doesn't mean it's not going to happen. I'll be like I say, I'll hold my hands up and say that it was wrong. I've not got any specific targets as to where these. Well, maybe for the Dixie about 101.2, maybe where we find our bounce. But for the euro, it's sustained a lot of pumping, despite a lot of. Well, I suppose a lot of news which should have brought it down. To be honest with you, I'm very surprised at its strength. So. Which kind of makes not that much sense to me as well. I have to say, something strange about the markets, because all markets moving. I mean, all markets. So European markets, you've got the DAX moving up, which doesn't make any sense. And you've obviously got the currency pairs all moving up. You've got gold moving up. You've got Bitcoin moving up. You've got US stocks moving up. You've got UK stocks moving up. It's all moving up. It doesn't really make a great deal of sense, to be honest, that everything is kind of moving up in this way. So I'm definitely skeptical about it. The only reasoning that I can put towards this is the general dollar weakness, and if that's what we're looking at, dollar weakness, then we should be thinking about being a little nervous the closer we get to a major area of support. This was a major area of support, and we did have a retest of a 200 exponential, but it hadn't death crossed at that point. If anything, now I'll be looking for a bounce from a deeper area to a higher area of about 3.5-4% from the Dixie, which is also more or less what we're looking for the euro to USD, pulling back to the tune of about 3.5% now from this current area. S&P as well, we've got to respect this. And a very significant area on the chart. Let's take off all this noise. We've got a giant, huge descending triangle, the bear market triangle. And again, these will break out at some point. And again, I've been saying since we came down to this area that I think that this is quite likely that this is the bottom for traditional markets. I've said that. I've said it over and over and over again. People are like, what are you talking about, man? It's over for traditional market. It's going down. Can you not see that? And I'm like, well, I'm just telling you what it looks like to me, okay? And now people are saying, no, can't you see? I know I told you that you were wrong and it was going down, but now I'm telling you that you were wrong and it's going up. So just make up your bloody mind, will you, Captain Noob Master? I'm just saying what I'm trading here. I'm not making any calls. It's a risk to reward scenario. I'm just trying to make money, as I am sure you're trying to do, But yeah, this would suggest to me an area where we should think about, well, just being a little cautious. We've got Bitcoin at its area of significance now, major area of resistance. We've got S&P at major area of resistance. We've got a dollar pulling back to what could be a 4% bounce. We've got euro just making up its own rules as it goes along, but with a very realistic possibility of a 3.5% drop. And the Nasdaq seems to be I've got the wrong NASDAQ chart up here. Let's have a look at this one. NASDAQ appears to be wanting to break out of its descending triangle, but it's done this in the past. We've had little tippies out here and here and here, and it gets sucked straight back in. Also, what I would say is that if this is the bottom, or if this is how we're going to measure this descending triangle from this support, which might not be the case, but if it is, then it's very close to the end of the apex, which often leads to a fake out. So we might see a move back up into what, 12,005, 12,006, and then that's it, a breakdown, maybe a retest of the support back down here below 11,000. So there's a lot to think about when it comes to the price action as we speak right this very moment in time. But it doesn't mean that there is no bull market or the beginnings of a bull market. That's not what it means. I'm just talking short-term time frames, looking for some pullback which, you know, could be reasonably large, and ones that we might be able to take advantage of if we get the supports that we are looking for on all these things like Euro, S&P, NASDAQ, and of course Bitcoin. So bit of food for thought there. I would say all targets are reached, even though we've front run this a little bit. There is this pump signal which could take us up to 21,000, give or take, but a pump signal generated, you know, literally what were we, 8 o'clock in the morning now. A pump signal was generated 8 hours ago on a daily chart. Could take up to a couple of weeks to play out. All right, let's put it like that. It could take a couple of weeks to play out, and that would also be appropriate with looking at the money flow index read of basically 94, which for me, anything at 95 and above is a no-go zone. You just can't touch anything at 95. It's just not. It's just madness. That's like, you know, it's like holding a toaster in the bath. You know, you just don't want to be doing that. But overall, everything does look good for long-term continuation, and I would be comfortable entertaining quite seriously, especially on a time cycle basis, as well as the accumulation and bullish divergence basis, that a bull market is about to begin if it hasn't already, and the low is already in if it is, you know, so it's all very possible, but. I would actually go as far as to say it's probably the most likely scenario that the low is in at this point now, and especially with S&P having its low in. As far as I'm concerned, I've said that since we hit that low, but there's a lot to stand back and watch and wait for, especially when it comes to Forex markets, because that's where, as we all know, that's where the major problem will be. For the most part, people can't see what's in front of their faces. I know you guys are different, but there is Captain Noobmaster who likes to tell me what he sees in front of his face. I see it going down, and it's going to keep going down because I've been told it's going to go down by the chart because it's got a red candle that's forming right this very moment in time. It will not go down to zero. The dollar will not go down to zero. This has been a dramatic downside from the dollar. And who told you it was going down? I told you it was going down from the peak. And Captain Noobmaster told me I was wrong. Now Captain Noobmaster is telling me it's going to go all the way down. I think Captain Noobmaster is wrong. Anyway, I'll have to leave it with you there. I've got to do the school run. I hope you have a nice day. Please leave a comment and subscribe and like the video and stuff like that. And join the channel Telegram. We're doing a Patreon live stream tonight, so use the links in the description for the Patreon. And I'll see you there, and you can ask me all the questions about all the charts that you want. Anyway, thank you for watching. Hope you have a nice day, and take it easy.